AJ Academy, let me show you how to get such A+ setups in this market, financial market. So this is Euro AUD. We are going to start from a higher time frame to identify the direction, and then I'll show you the entry model to get such kind of trades. Uh, let's go to the monthly time frame. So on the monthly, this is the market structure that we have on the monthly time frame. So if you've been my student or you've been watching my videos, you know how to draw ranges. We have a sweep of liquidity right here, and then we have a breakout. After having this sweep and a breakout, you need to mark your strong high, and then we've marked our strong high at this point. Now you need to scale up to the 3 months time frame or a higher time frame depending on the time frame that you are in. So this is the level, this is the key level on the line chart. You can see this is the A level. So you wait for price to come back and mitigate that area, and then you can sell. If it was a bullish range, you can buy instead. So back to the monthly, there was something I wanted to show you. So how do you know that this range, this bearish range, has created its low? It's by having a counter range. Now what do we mean by a counter range? Remember here we marked a sweep and then a breakout. So a counter range is when you have now, for example, at this point we have a sweep right here. This is a sweep, and then we've had a breakout. So you mark your strong low, and that's when you know that now all this price action that is happening at this end, it's going for internal range liquidity to mitigate a higher time frame key level, which you'd marked earlier as this A level, and then price mitigates and price starts selling. So on Euro AUD, let's get to the recent market structure. You can see after mitigation of these key level on the 3 months time frame, we had another formation of range, which is a bearish range. Remember, we are bearish on Euro AUD. So this is the range that had formed. Right here, you can see we have a sweep of liquidity, and then we have a breakout at this point. Let me zoom in. So you can see we've had a sweep right here, and then this is our breakout. After having this, you need to mark your strong high. After marking your strong high, what do? You scale up to the higher time frame, like the 3 months, to find a key level. So on the 3 months time frame, you can see this is the level that we had right here. Let me mark. This is the level, and price came, reacted from that area and we had more sales. But you can see it was a high drawdown. But if you scale down to the lower time frames, because you're not going to take your entries on the higher time frames like the monthly or rather the weekly, you could spot something. There are fresh key levels at this point, so you could have entered from, you could have done your refinement to those areas. But let's continue with our analysis now. After having, remember I told you, when you have a bearish range, how do you know that the range has formed its low? It's by forming a counter trend on the very same time frame. So where do we have our counter trend? Right here. If I mark another counter trend, you can see we have this sweep. Let me have it in another color, like red. We have this sweep, and then we have this breakout. After having a sweep and a breakout, what do you say? You mark your strong low. So this is our strong low, and then now this is the low of the range, and then this is the high of the range. So this is the price leg that we are going to trade. This is how you build direction in the market. Now this is the price leg we are going to trade. Now whatever price action that is happening here, after getting this sweep and this breakout, it's going for internal range liquidity. Internal range liquidity can be in form of equal highs, Asian highs that have accumulated together, and then now price always heads to that, take the internal range liquidity, and then gives us the real move. So you can see after having these, now we need to scale up to a higher time frame like the 3 months to mark our first target or the obstacles. Remember, we are bearish, so definitely this is a strong low, but we are going to take it regardless, because we are bearish. In the overall market structure, you can see the transfer of money was transferred from here to this end, and then money is going to be transferred to this end, and that will form that series kind of price movement. So let's get on the 3 months. Right here, do we have a key level that is fresh? You can see this level, it's unfresh, but right here we have a level that is fresh, and that's where we mark. Even if you scale further, even to the 6 months, you can see an alignment of that level. It's an OCL in the 6 months, also it is an OCL on the 3 months, so it's a strong level. So this is the very obstacle that we are waiting for price to come and react from. Yeah, price is going to break below this obstacle or below this level, but this should be your first target. So what do we do now after getting the direction of the market? Remember, now you have in your mind that this is the market structure and this is the market direction. We are bearish. Now if market gives you any bullish kind of setups, yeah, they can be A plus setups, but now you're going to be focused on bearish setups. Now after getting the market direction and the higher time frame for day traders, now you can scale down or trickle down to the daily time frame, because for day traders, I think you should start building your bias or the market direction or any storyline from the daily time frame. So this is the daily time frame on Euro Audi. What do you see on remember, we've decided that we are only going to take bearish setups. So for this case, yeah, market can give you an A plus setup, which is a buy, but remember the market direction, we are on bearish. So for this case, you can see we have this CRT right here, CRT model. If you've ever traded CRT, you can know this price took this low, and then this is the CRT high, and then after taking this low, candle range low, it went ahead and took this high. So you could have taken that trade, but remember, I don't take such trades because we are on a bearish move. So the kind of trade I could only take this CRT, I could only take is this one. We have this CRT as well, and then this mitigation, this break of CRT or this sweep of the high of the CRT tapped into this zone, which is an OCL, and price completed the range at this point and even pushed down below. So I could have taken this trade, and I've actually done analysis of this trade. You can go check it out, and then like, subscribe and share. So for this kind of trade that I showed you earlier, so this is the market structure. How do you build? This price action is very messy, but we will see. I will explain how you can take a trade from this market structure and get clarity and refine and keep a clear structure in the market. So what do you see when you get to your charts and find this kind of market structure? You need to first identify, remember you're a day trader, now you need to identify where is the key levels on the daily. So at first, this is what I saw. Once I saw this kind of market structure, I saw this level right here. You can see this is a level on the daily. Let me make it bold. This is a level on the daily which has been rejected. So it's daily rejecting daily. So what do you do after daily rejects daily? You go to the 4 hours for a breakout. Let's go to the 4 hours. This is on the 4 hours. On the 4 hours, what did we see? Remember, this is our, let me mark it with red. This is our daily level, and we saw that daily has rejected daily. Now we needed for to get a 4-hour breakout. But what did we see? Price came to that daily level, broke or closed above that daily level. Are we interested that now this daily has been this daily key level has failed to hold? No. Now we don't just invalidate this level, we just wait to see and observe. Now this is where patience plays out. You need to just stay and observe. Remember, you are only interested in sales. So this price closed above it, and also the next 4-hour candle, which is this one, closed above it. But you see the essence of this 4-hour candle, what did it do? It went ahead and took these highs, which was a sweep of liquidity. Remember, for you to take a trade or for market to give you a good or a good push, to give you a good market move, it must take out liquidity first. So why do I say this is liquidity? We use Asian sessions as a liquidity. Asian session is used to build up liquidity. So you can see these are the one that I've highlighted with gray, a bit gray, darker screen. It's my Asian. This is an Asian high, this is an Asian low. So you can see this relatively equal Asian highs. So price came with this 4-hour candle and took those Asian highs, but still we haven't gotten at the correct market structure. But what now I waited in these 4 hours is for the 4-hour candle to close below this daily level, and we can see right here this 4-hour came, closed below. After closing below, now I know that it has confirmed that this level again, it's fresh. You remember it closed above it, it used this level as a support. When it closes below, the next time this level is going to be used, it's going to be used as a resistance. Now I can scale down even to 1 hour time frame. So on the 1 hour time frame, this is what I saw. Remember, I marked this line to allow me to know where we had that breakout. So this red line, actually let me make it blue. So this line, price came, closed. Remember, this is where price closed below our level, or rather this is the line, this is the daily level, and this is where the 4-hour candle closed below. So after closing below, you can see we had a good level right here, which is an A level where we sold price from. But this wasn't random. If you go to the 30-minute time frame, you can see another small range on the lower time frame. So where we have a typical range confirmation, where we have this what we call a sweep, and then this is what we call a breakout. After having these two, what do? You mark your strong highs. This is the strong high. Now you can scale up a higher time frame. If you scale up to the higher time frame, which level do we have? Remember, this is where we had a sweep. Which level do we have? We have this level right here, which is very consistent. Even if you go to the 30 minutes for the SMC traders, you could have marked this candle as your order block, or rather the supply zone. So that's where price came, retraced, mitigated that zone, and we were targeting these daily external lows. This is the daily, that's where we were targeting. And remember, this is our basic entry model right here. So we need to have what we call a sweep of liquidity, and then we have a breakout, we have an inducement, and then it taps into a higher time frame key level and it sells. This is a typical sell position, and for buy position we need to have this sweep and then a breakout. After having a breakout, we need to have a inducement or build up of liquidity, and then mitigation into a higher time frame key level, and then you buy. So this is a buy setup and this is a sell setup, and this is what we always want to see in the market repeating itself. Actually, the rest is for you to be patient and understand the market structure. So don't always rule out a key level. Like you can see even this daily level, remember the higher time frame gave us direction that we are bearish. So if we could have just seen this kind of closure and then above the daily level, and then we say now the daily has been invalidated, now we are on buys, you could have chopped this SL. But now we decided to wait for price to actually see how we are going to react from that daily level and build a structure, and that's when we build this structure after we had a forward closure below, and then that's how we entered. And we also have other entry models, but for this case it was just simple using this kind of entry model that I've explained right here. So if you want to learn this strategy, you can DM me on my Telegram. The link, it's on my profile. So peace out. Kindly subscribe, watch, share, and like. Bye bye.